Hey, what's happening, everybody? Memory chip stocks are experiencing some of the most violent high volume price action we've seen all year long, with massive structural AI demand clashing against macro overbought indicators. Names like Micron, Western Digital, Seagate, SanDisk, they're all sitting at critical macro trend lines right now. If you're trading, buying, or holding in the sector right now, treating these like ordinary tech stocks is the fastest way to get caught on the wrong side of the cycle. In this video, my goal is to strip away the retail noise to give you pure data-driven background of the memory space. We'll look at the DRAM ETF, that's DRAM, which heavily weights these giants to map out the institutional order flow and see where the smart money, the large institutional investors, and the algorithm buyers, traders are moving. Then we're dropping down into the actual charts for Micron, that's MU, Western Digital, WDC, Seagate, STX, and SanDisk, SNDK to identify exact high probability long and short term triggers. By the end of this breakdown, you won't just know where these stocks are trading, you'll have a concrete, actionable risk to reward levels. You'll see where the key support resistance zones are with moving averages, and I hope that you'll have a clear mind to game plan for your portfolio and investments. No hype, no guesswork, just clean technical analysis. But before we do, please press that like button for me, press that subscribe button for me, drop into the comments #memory chips, and of course, if you've got any comments or questions during the video, after the video, drop it in here too. I promise you I'll try my best to respond back to you all. Let's go. So the first thing that we're going to cover is actually going to be DRAM, okay, DRAM, the ETF. I've got their chart pulled up right here. We'll be diving into the technical chart for the Roundhill Memory ETF, okay, again, ticker symbol DRAM up on the screen right now. Now, in case you're not aware of what DRAM is, okay, so it's a ETF, which stands for Exchange Traded Fund, that bundles together global companies making computer and memory storage chips. Okay, so we're talking about Micron, Samsung, SK Hynix. They're all up inside of this one ETF, which essentially you can buy as a stock. And right now, these chips are the absolute backbone of the AI revolution because AI needs massive amounts of quick data storage to function. Looking at the chart, it's been a rough couple of days. Everybody knows that. Let's go ahead and break down exactly what the data is telling us. First, if you take a look at the top blue line, okay, and that blue mountain right there, that's the price for DRAM currently. That represents the price of the ETF. You can see it peaked over $80, but look at the very far right side. It took a sharp dive down to $60.63. That's where it landed at last trading day, losing nearly 8% in just that one day. Now, if you take a look at the red line running through that blue area right there, that's the 25-day moving average. They also call that the EMA. This line tracks the average momentum over the last month. Notice how the blue price line just crashed straight below that red line all the way on the right hand side. Okay, when the price falls underneath its moving average, it's a classic warning sign that the short-term trend has essentially flipped from being bullish to bearish. Okay, that means from feeling like it's going to be doing very well, everybody wants to get up on that stock, to now everybody's afraid to hold it, everybody's selling it. All the shareholders that's got a piece of it right now, they want to kind of get out of there. So that's the momentum that it's looking like right now. But again, we're putting our finger right on the chart, right on the technical analysis, and letting the data tell us the story. Now let's take a look at the relative strength index. Okay, that's the RSI 14-day relative strength index, and it's at currently about 45.46. Essentially, anything below 50 means that the sellers are officially in control of steering the stock price right now, and technically anything over 70 is overbought. Anything under 30 is oversold. So that's how you can kind of gauge your judgment on if the stock is a good time for you to move in on it. So moving forward, we've got the MACD line, which is this one right here in the middle, MACD. We've got the red and green histogram with the green line here, and it's supposed to be a lighter red line. That's also known as the signal line. And right now, the MACD line, the green line, has now gone under the signal line, which tells us that there is a downward momentum and it's actively speeding up, going downwards. The last thing on the bottom, I added this up today. It's the on balance volume. So this yellow line right here is it, and it tracks whether the money is flowing into or out of assets. You can see the steep drop on the right with volume around 401 million. This confirms that it wasn't just a tiny dip. Large investors were actively selling and pushing their money out of the fund. The bottom line, in my opinion, is DRAM, the ETF itself, is a great long-term play on AI, but right now the chart's telling us to exercise caution. The price has broken below its red support line, right? The key red support line. Momentum slowing down and sellers are dominating, and we want to wait for the blue price line to stabilize and ideally cross back above the red line before calling a bottom. With that being said, when you take that ETF, and it's got all of the memory stocks bundled into it, all of our favorite stocks, right? The SanDisk, the Micron, the Samsung, the SK Hynix. This ETF really tells us the story of the chip market, the chip memory market, and that sector and how it's performing, where it's headed. So right now, of course, I mean, all the stocks, all the memory stocks are headed downwards, and that's what caused this ETF to move downward. It's a really good tool to use this ETF to get a good gauge on how that sector is doing because, of course, multiple stocks in that sector are down. All of the largest memory stocks are down. And that's exactly what this ETF right here represents. I'm going to go ahead and move into Micron Technology, ticker symbol MU, which is one of a lot of folks' favorites out there. All the retail investors love it. Institutional investors love it. In case you're not sure of what Micron is, they are a major American tech company that makes memory chips and data storage found inside of everything from smartphones to laptops to massive AI data centers. Of course, because artificial intelligence is booming right now, their chips are incredibly high in demand. They're partnered up with NVDA. They're partnered up with the CHIPS Act for the U.S. federal government. They just had their earnings call, which they promoted 16 service contracts with new partnerships. And everybody knows that their HBM, their high bandwidth memory, is in high demand, sold out right now for the foreseeable future. So before we dive into the charts, I've got this article right here on bar chart that I'd like to read for you all. This one right here is titled Micron Risk Falling Out of $1 Trillion Club. So of course, with the price dropping down, with their stock price dropping down, their market cap going down, their risk, that's exactly what they're trying to say, is that they're at risk of dropping out of the $1 trillion market cap club right now. And so I've got these things highlighted that I want to read off for you all. Demand for high bandwidth memory, HBM, for Micron Technology, MU, Samsung Electronics, and SK Hynix continue to outpace supply as hyperscale cloud providers race to build AI infrastructure. Yet the market has begun questioning whether today's supply shortages will last. And everybody knows that. I mean, the thing with memory companies is that they've always been known to be a cyclical commodity, meaning that every time, I mean, they're going to have that rise in strength when memory is extremely needed. And then, of course, they're going to have that dip after that wave is over with. Right here says memory's explosive rally faces its first real test. The decline came despite another strong earnings report from Micron showing continued pricing strength, robust HBM demand. Instead, sentiment shifted after reports that Meta Platforms, the ticker symbol META, plans to lease surplus AI data center capacity to third parties. Now, I mentioned this in one of my last videos, but what really happened was after that, Meta had announced that they were going to go ahead and lease out their surplus AI computing, that maybe we're already way too close to the maximum needed amount of compute. And then, of course, with that thought in mind, I mean, how much more memory are we going to need, right? Especially with all these stocks like Micron and SanDisk going parabolic, and of course, SK Hynix and Samsung out in Korea as well. So that's what they were talking about right there. Moving forward, granted, those concerns aren't entirely unfounded. Memory has always been one of the semiconductors industry's most cyclical businesses. As supply catches, pricing typically cools. Here we've got the key takeaway. In short, investors shouldn't view this as an either or decision. Micron's recent pullback doesn't necessarily mean its $1 trillion plus valuation is in jeopardy. Micron still enjoys one of the strongest supply-demand imbalances in semiconductors, and company guidance suggests HBM demand remains well ahead of available supply. Ultimately, both companies should maintain and grow their huge valuations over time if AI infrastructure spending continues anywhere near its current pace. And of course, in my opinion, if we can't put our finger down on the revenues, on the cash flow, on their free cash flow, that it's trending downwards, or that we're not getting that type of news from the business itself during their earnings call, that they're not being able to make any more sales, all this stuff, in my opinion, can remain a sentiment to me. But what we've got to be aware of is that sentiment drives the market as well. So that's why I wanted to read this here for you all. Let's move in and dive into what the charts is showing, the technical indicators are showing for Micron Technology, okay? So on the last market open session, July 2nd, which was last Thursday, they went under $56.76, down about 5.5%. If you take a look at that red line up top right here, that's the 25-day moving average, same as the last chart. All the indicators are going to be the same for each of the charts that I show you all. So again, the red line, 25-day moving average, it tracks the short-term trend, and you can see that the stock price on the right-hand side just broke below that red line. That's a short-term warning sign, of course, because the stock has lost a lot of momentum with that drop. Now, if you take a look at the lighter red line, it looks pinkish orange right here, but it's sitting at around $706. That's the 100-day moving average, and it tells us that even with this recent drop, the long-term trend for this year is still incredibly strong and up. Let's take a look at the RSI 14, okay, relative strength index. It's at 48.47, similar to the ETF for DRAM, right? DRAM was at 45 here, and then we've got 48. So, of course, anything roughly about 50 is there's kind of an even sentiment on the buying and selling right now. We take a look at the MACD line. The MACD line is the green line. It dropped under the signal line, which is this pinkish line right here. So, of course, downward momentum with the MACD. And then for the on-balance volume, notice how this yellow line has been making lower peaks recently, okay, lower lows. That to me means that less money volume is pushing behind the stock on up days, confirming that the stock is taking a breather. The big takeaway for me is that Micron is an absolute powerhouse. There's no doubt about it. The demand's there. But looking at this chart here, the stock is hitting a short-term speed bump, of course, speeding below that 25-day moving average, and seeing the MACD line cross under means that we might see some more cooling off before we find footing again. So how do we find the best entry point if you want to get in on Micron, right? Especially because, I mean, really, they're at a discount right now. They were in the 1200 level, now dropped under 1,000 already. If you're looking into this, right, look back at the main price area, okay? Because the price fell under this red 25-day line, I mean, we don't want to just jump in and catch that price because it's falling. Instead, we want to wait for two different things, okay? We want to wait for one, the bounce, okay? So once it kind of stops dropping already and then it starts going up, you want to kind of catch it on its way going back up for that momentum. That will be above the 25-day moving average line. And then number two, okay, of course it's at a deep discount. If the stock keeps sliding, we look further down the chart towards that 100-day moving average range. Strong stocks often find a major floor when they pull all the way back to their 100-day line. Buying near the orange line is going to give you a much safer long-term entry point with less downside. That's my opinion, okay? So keep an eye on those things there if you're interested in Micron. Let's go ahead and move into SanDisk now. And same like Micron, I pulled up this article on SanDisk on a lot of really good points that I'd like to share with you all. SanDisk slumps 10%, but Bank of America stays bullish. This is on bar chart. It was published on June 2nd, which was Thursday, the last market session day. SanDisk Corporation, SNDK, is a pure-play NAND, flash memory, and data storage company spun out of Western Digital, WCD, in February of 2025 and headquartered in Milpitas, California. The company develops, manufactures, and sells broad portfolio storage solutions, including enterprise solid-state drives, embedded flash products, removable memory cards, and USB drives, serving data centers, cloud service providers, PC manufacturers, and consumer electronic makers. As artificial intelligence infrastructure build-out accelerates globally, SanDisk enterprise SSD and high-density NAND products have emerged as mission-critical components in hyperscaler data center demands, positioning the company at the heart of one of the most powerful secular growth trends in the semiconductor. So that's what they do. Everybody knows SanDisk from those little thumb flash drives that we've been using for the past, I don't know, 20 years or what. They've just been spun off from Western Digital, WDC, which we're going to cover that stock in a bit as well. But practically, I mean, right here says it all, right? SanDisk revises strong outlook. Q3 2026 results reported on April 30th. The blowout quarter underscored the sheer scale of AI-driven demand reshaping the enterprise storage landscape. SanDisk also secured approximately $42 billion in multi-year AI supply contracts, providing exceptional forward revenue visibility. So, I mean, a lot of money's to come. They've got all these contracts in place already. Bank of America hiked up their price. Right here says SanDisk shares tumbled 10% Wednesday, July 2nd, which was the last market session. SanDisk price hiked by Bank of America. So right here, Bank of America raised their target up to 2,500 from the 2,100 level and reiterating its buy rating, signaling an upside potential for 41% from current levels. So of course, Bank of America is liking them. Bank of America is one of the credible institutions that when they rate these targets, right, I mean, everybody's got their eyes on it. The irony behind all this is that Bank of America also released something saying that valuations should be looked at a little bit more closely, scrutinized a little bit more, essentially something along that line, because of the parabolic moves in a lot of these AI stocks. So that's the one thing, right? I mean, I've seen a couple of Bank of America analysts actually have bullish sentiment while they have reportedly pushed out that statement, which was a little odd in my opinion. And then lastly, NAND market as the key structural tailwind, expecting strong pricing conditions to extend through mid 2027. So of course the outlook is decent for and very well for SanDisk. I believe that their bullish sentiment should still stay intact. However, I mean, they're challenged through this downfall right now with the rest of the AI semiconductors and memory chip companies. So with that being said, let's take a look at how SanDisk is performing on the charts. Okay, so they're at $1,745 last market session close, dropped $287. 14%, so that's an enormous amount that they've went under right now. If you take a look at the 25-day moving average, the red line, okay, for this last month, this stock price was riding safely above it, but notice on the very right side of the Blue Mountain chart, the price completely sliced right through that red line, and when a stock breaks below that short-term average, it's a clear warning sign, of course, and you've got to be extremely cautious at that point. What that means to me is that the short-term momentum has flipped from being bullish, where a lot of folks want to get in on the stock, to being bearish. Now everybody is avoiding it, wants to stay out of it. Now, if you trace down that orange line right there, the 100-day moving average is sitting right at about $1,285. That's our major long-term safety. If the selling continues, that's the next big floor that the buyers might want to step in. So they use that as like a support level, meaning that once it hits that level, we want to see it just kind of consolidate in that level and hopefully find its way back up from there. So keep an eye out on that 100-day moving average. Now moving into the RSI 14, it's at 46.81, similar to Micron and the DRAM ETF, same story there, kind of in the middle between the overbought and oversold currently. And then moving into the MACD line, same story as the other two stocks. The green line, which is the MACD line, has dropped under the signal line, downward trend. And of course, if you, I mean, the price tells us all, right? If you take a look at that blue mountain line price, that shows us everything that we need to know. Now, if you take a look at the on balance volume, of course, as it was trending upwards, but it's making its way to lower lows. What that's telling us is that institutional money is not just sitting still, right? The big players are actively dumping the shares during this sell-off right now. Bottom line for me, SanDisk broke its short-term support in a violent way until price can actually claw its way back up above that 25-day moving average. The bears are largely in charge right now. Keep your eyes on this one. You want to see it consolidate and kind of find some momentum moving upwards before you get into it. Wait for a bounce and a rebound going upwards, finding some momentum before you buy the stock. That's my opinion, at least. Although relative to its all-time high, it's at a real great discount right now and may get a lot of folks interested in trying to buy it. And then of course, when a lot of people want to buy it at that discount, that's when that momentum is going to start climbing back up again. That's when you want to catch it, because you don't want to catch it when it's at a point where it's going to continue to lose even more momentum, and they call that catching the fallen knife. So that's SanDisk for you all. Let's move into Western Digital, and I've got this article right here for everybody. Western Digital stock falls as Apple talks add memory pressure. I'm going to just hit these bullet points right here for us real quick. Western Digital shares decline nearly 10% in sector-wide sell-off affecting semiconductors and memory stocks. Everybody has seen that already. Concerns include a pause in AI-related chip spending and macro headwinds weighing on sentiment across the group. That's exactly what we had seen across Micron, across SanDisk, the ETF DRAM as well. Apple is reportedly reporting a partnership with Chinese memory supplier CXMT, raising the risk of lower cost supply entering Western Digital market. And that's one of the big things that they're watching out for right now, is that with memory prices going up real sky high, Apple is trying to get cheaper memory out in China. And so that's something that everybody should certainly keep their eye on, and can definitely bring down that type of memory demand here in the AI infrastructure build. Let's jump into the Western Digital chart right here, and we've got them at $539 last trading session, down almost $60, $59.37, down almost 10%, 9.92%. So quite a big drop, just like the other memory stocks. As you can tell, the blue line has just dropped down steep, going down this way as well. The 25-day moving average is now above the price line, and that means that it's, of course, downward momentum. However, at the end of the day, I mean, it's still, the price is still on top of the 100-day moving average, which hopefully it doesn't get down that low before it catches some momentum going back up. We'll see how that turns out. We take a look at the 14-day RSI, 44, 45 practically, similar to SanDisk, similar to Micron, similar to the ETF DRAM, and they're all kind of in that level right now. So it's kind of just consolidating. Wait to see if you can see buyers moving it towards the 70, 80-ish range for it to become more into that overbought momentum. That'll raise the price up a little bit more. And then similar story, same story with the MACD line down under the signal line, downward trend, and then same thing for the on balance volume, right? You see this steep climb right here and then just drops to lower lows just like the other stocks. So downward momentum right here, right there. Same story if you want to get in on Western Digital WDC. Just exercise caution. Wait till it catches some momentum. I would say that you may want to wait until that price line tries to catch up to that 25-day moving average. At that point right there, as it starts to surpass, you want to catch on to that momentum there. But that's just my 2 cents right there. You got to find out what's going to be most appropriate for you, your portfolio, your trade style, your investment style, and what your goals are. Now, let's go ahead and move into Seagate, which is the last memory stock that I've got for you all, with a couple of bullet points here on this article from Simply Wall Street. Seagate stock falls as AI storage oversupply fears rattle sentiment. Seagate Technology Holdings shares drop sharply as concerns grow about potential oversupply in AI-focused memory and data storage. Similar to all the other stocks in that sector, everything that we've covered so far, same story, right? I mean, you guys are seeing the trend right now on all the largest, most profitable American memory chip companies. So same thing, same trend with all of these. Sector-wide worries center on increased capacity from major storage competitors and signs that AI capital spending may be leveling off. Investors are reassessing demand expectations and pricing power across storage supply chains. So that kind of ties back to the whole B of A story about how valuations and everything's got to be reassessed, as all these memory stocks have gone parabolic, has been climbing up so strong in price. It's almost a holler for investors to be more cautious. Let's dive into the chart and see how Seagate Technology is looking. Their ticker symbol is STX. Last market session closed at $820, down $95. That last market session down 10%, which is the $95, the 25-day moving average. The price has dropped below that line. That means that the momentum's going downward, just like the rest of the other ones that we have seen already. However, like Western Digital is still on top of the moving average. However, like Western Digital, the price line is still on top of that 100-day moving average, which means that it can still potentially go back up above the 25-day moving average, in my opinion, if you're going to be looking into moving in on it, similar to the other stocks, right? Wait till it catches that momentum at or above that 25-day moving average line at least. And then, of course, you want to watch out for the overbought signals from the RSI, Relative Strength Index. Right now it's at 41, lower than the other ones by a little bit. And you want to see it start catching some momentum, 50, 60-ish, up towards the 70-ish, 80-ish, before you start getting in on it. Otherwise, I mean, if it starts to continue to lose even more momentum, drop even lower, price drop down, you're catching, again, I mean, that downward momentum, which is not going to be very fun. Then we've got the MACD line. Same as all the other ones, the green line, MACD line below the signal line, downward momentum. And then if you take a look, the one thing I didn't mention on the other ones is the red histogram. As you can tell, the red histogram was above this, what they call the zero line, and then it starts to go down under. That's a real bearish sentiment. So whatever you're looking to do, buying, selling, or holding the shares, if you've still got them, I hope this shows you how the trend is going and how to better position yourself, or give you a better idea of how you're going to position yourself for your next move. Moving into the on balance volume, similar to all the other ones, right? It had this high spike here and then started dropping down as well. So this means institutional investors and the big money are actively pulling cash out of the stock right now. If you add all this together, my takeaway from this is that, of course, Seagate has been a powerhouse, but from this chart, it shows the textbook correction breaking below the 25-day moving average on high volume. We've got to exercise that with caution. We're going to want to see how the stock finds its footing and stabilize, consolidate before it starts moving upwards, or see if it continues a downward momentum, which is going to bring the price down even more at that point. At the end of the day, however you take all of this in, all the data that I provided you, all the things that we put our finger on, all the downward trend, I hope that it helps you out with whatever you plan to do with these stocks, whether it's buying, selling, or holding, as I had mentioned. Best of luck to you all. And then lastly, tell me which stock you like. Tell me what you like about the stock. Tell me what you think about the memory chip market and where it's headed. Give me your ideas on this as well. I like to get different perspectives and gauge other people's opinion on the stocks. Thank you so much for watching. Again, my name's Curtis. Click that like button for me. Click the subscribe button for me. I will see you all next time.